5 straight losing sessions for the Nasdaq.
And the one thing meant to cushion that fall did not.
Long bond yields climbed right back on the same day stocks dropped.
In the next 2 minutes, where that pressure moved, which sector it crowned, and what the ranking data saw that the tape did not. SPX filled Tuesday's gap and hit a hard rejection right at its 10-period moving average, a topping tail. QQQ is now 5 consecutive sessions to the downside, testing the 50-day. VIX holding elevated. The Treasury move couldn't rescue equities. The bonds market answer was immediate and brief. The 10-year dipped off its recent high, then climbed right back. TLT caught a bid and gave it up. The dollar softened. But the fiscal pressure underneath is not resolved. That sticky yield pressure has a clear winner. WTI held above 85 after a 4-session run, Hormuz supply risk offsetting a 4.4 million barrel EIA build. XLE confirmed above prior resistance. Supply scarcity doesn't need the Fed to cooperate. Precious metals are tracking the same fiscal stress signal. 3 to 4 weeks of persistent inflows. Gold approaching a supply shelf. Silver watching a potential breakout. Copper pulled back Friday. Bonds fail, metals step up. Simple read. International data is split, but EFA's uptrend is holding, and emerging markets are improving on dollar softness. Chart and story aren't telling the same thing here. Bitcoin had a big week, up around 16%, clearing the 200-day moving average, with spot ETF inflows heavy. But the backend flagged a resistance cluster right at the 10-month moving average. On-chain confirmation of a cycle low isn't there yet. 57 symbols shortlisted. Number 1 sector, XLE, energy. Not tech. Not anything rate sensitive. The hard asset, supply-constrained trade, ranking first when yields are stuck, is the system's structural answer to the day's bond market story. Ranking board confirms it. XLE leads at number 1, still in a leading state. XLV and XLF are both lagging. Only energy holds that classification right now. Narrow sector leadership in a sticky yield environment is a structural signal, not noise. ARKG takes the top ETF slot. ARK Genomic Revolution, a high beta basket of gene editing, sequencing, and synthetic biology. Signal state is weight. ARKG topping the ETF rank here reflects a narrow thematic rotation, not a broad market green light. Top rank stock is Team, Atlassian, Jira, and Confluence, with a signal state of unknown. Enterprise software tracks multiples and seat growth, not the supply cycle. That's a different story from the names the scan flagged earlier in the session. Treasury's $4 billion intervention couldn't hold yields down, and what that built was a market where energy leads and tech sits out. The thing to watch tomorrow: does the 10-year confirm a break above that 20-month high, or does the Treasury finally hold the line? Verify both live in SignalFinder Pro. And remember, this is educational content, not financial advice. Do your own analysis. Educational content only, not financial advice. SignalFinder Pro is a research and workflow tool. Always do your own analysis and manage risk.